Is a $2,400 Social Security check hitting your bank account tomorrow, January 28th? If you were born between the 21st and the 31st, you are officially in the final wave for January. But there is a massive wave of misinformation spreading that you need to hear the truth about right now. While millions are indeed expecting their deposits tomorrow, the viral rumors of a special $2,400 bonus are leading many into a costly trap. The reality? Tomorrow's payment is the standard monthly benefit featuring the new 2.8% COLA increase, but that $2,400 figure you keep seeing isn't a one-time stimulus. It's actually the estimated new monthly maximum for a specific group of high-earning retirees. If you're expecting an extra bonus on top of your regular check, you might be in for a shock. Furthermore, because of a calendar quirk, SSI recipients are also seeing a second payment on January 30th, making it look like a double-pay windfall that requires careful budgeting. I've spent the morning verifying the official SSA Treasury schedule and the rising Medicare Part B deductions that are actually shrinking some of these bigger checks. Today, I'm breaking down exactly who gets paid tomorrow, the truth about the Social Security Expansion Act still sitting in Congress, and the one big mistake that could delay your funds. If you want to stay ahead of the rumors and help our senior community get the facts, hit that like button right now. It helps get this urgent warning to everyone who needs to see it. Now, friends, let's get straight to the facts, because when you hear a number like $2,400 being tossed around, it's natural to feel a mix of excitement and skepticism. We are currently navigating a very specific window in the 2026 payment calendar that is causing a perfect storm of confusion for millions of retirees. Tomorrow, Wednesday, January 28th, is a significant day because it marks the final wave of standard Social Security retirement and disability payments for this month. If your birthday falls between the 21st and the 31st of any month, that money is officially headed your way. But I need to be very clear. For the vast majority of you, that deposit is your regular monthly benefit, which now includes the 2.8% cost of living adjustment that kicked in this year. It is not a separate $2,400 stimulus check from the government, and believing otherwise is a big mistake that can lead to major budgeting errors. The reason you are seeing that $2,400 figure everywhere is a bit of a numbers game being played by certain headlines. In 2026, due to the new COLA, the average monthly benefit for many retirees has climbed, and for those who have reached their full retirement age or delayed benefits, their individual monthly checks are often hovering right around that $2,400 mark. In fact, $2,400 is essentially the sweet spot that a high-earning individual who retired at age 67 might see on their statement this month. So, while many of you are indeed receiving a check for that amount, it is your earned benefit, not an extra bonus. However, there is a legitimate reason why your bank account might look much fuller this week, especially if you are among the 7.5 million people who receive supplemental security income. Because of how the calendar falls in early 2026, January is what we call a double payment month for SSI. You already received your January SSI payment way back on December 31st, 2025. But because February 1st, 2026 falls on a Sunday, the Social Security Administration is required by law to send out your February payment on the preceding business day. That business day is Friday, January 30th. This means that within a single 48-hour window, between the Wednesday retirement checks for the late-month birthdays and the Friday SSI deposits, billions of dollars are flooding into American bank accounts. If you receive both retirement benefits and SSI, it can absolutely look like a massive windfall is arriving at once. But remember, that Friday payment is your February money. If you spend it all tomorrow, you will have a very long wait until March for your next deposit. Now, let's address the elephant in the room, the rumors of a special emergency dividend. There is a piece of legislation currently making waves in Washington called the Social Security Expansion Act. This bill, championed by senators like Bernie Sanders and Elizabeth Warren, actually proposes a $200 monthly boost for seniors to help cope with the rising costs of housing and healthcare in this 2026 economy. If that bill were to pass, it would add up to exactly $2,400 per year in extra benefits. This is where those viral tomorrow rumors are likely getting their wires crossed. While the bill is being debated and has garnered a lot of attention, it has not yet been signed into law. So, while the fight for more relief is very real, that specific bonus money isn't part of tomorrow's deposit. Another thing you must know before that money hits your account is the Medicare Part B sticker shock. For 2026, the standard Medicare Part B premium has officially increased to $202.90. Since these premiums are usually deducted directly from your Social Security check, many of you might notice that your 2.8% COLA raise feels a lot smaller than it should. In fact, for many seniors, the $17.90 increase in Medicare costs is eating up a significant portion of their actual raise. If you look at your deposit tomorrow and find it's not quite the big jump you were expecting, this deduction is almost certainly the culprit. It's a frustrating reality of 2026. The government gives with one hand through the COLA and takes with the other through healthcare costs. I also want to warn you about the payment timing trap. With so many checks moving this week, the Social Security Administration systems are under heavy load. While most electronic deposits arrive by the start of the business day, the official rule is that you should allow 3 additional mailing days before you panic or call the agency. If you wake up tomorrow and your money isn't there by 9 a.m., don't assume the worst. Check your My Social Security portal first. It will show you the exact status of your January 28th payment and even provide a breakdown of any deductions for taxes or Medicare. Being informed is your best defense against the anxiety that these calendar shifts can cause. We also have to talk about the earnings limit changes for 2026, because this affects those of you who are still working while receiving benefits. If you are under your full retirement age for the entire year of 2026, the new earnings limit is $24,480. If you earn more than that, the SSA will withhold $1 in benefits for every $2 you earn over the limit. If you reached a milestone birthday recently and your check tomorrow looks smaller than usual, it might be because your reported earnings for 2025 triggered an adjustment. The SSA is becoming much more efficient at matching your tax data with your benefit payments, so the days of waiting months for an overpayment notice are disappearing. They are catching these discrepancies much faster now. There is also a lot of talk about the Senior Citizens Tax Elimination Act, which is currently gaining momentum in the House. If passed, this would stop the federal government from taxing your Social Security benefits entirely. Currently, if you earn over $25,000 as an individual, up to 50% or even 85% of your benefits can be taxed. This is essentially a double tax that many feel is unfair. While this bill is not yet law, it is one of the reasons the $2,400 figure is being discussed. Proponents say that eliminating these taxes would effectively put an extra $2,400 back into the pockets of the average senior every year. Again, this is a future goal, not a reality for tomorrow's check, but it shows you how active the conversation around your money has become. Lastly, stay vigilant against the validation scams. Because these dates are public knowledge, scammers are out in full force today and tomorrow. They are calling seniors pretending to be from the SSA, claiming they need to verify your bank info to ensure your new $2,400 payment arrives on time. They might even mention the 2026 COLA or the January 30th SSI date to sound legitimate. Listen to me, the SSA will never call you to verify information for a payment that is already scheduled. If your bank info is on file, the money will move automatically. If you get a suspicious call, hang up and report it. We've worked too hard for these benefits to let a criminal take advantage of a confusing calendar week. Stay sharp, watch your accounts, and remember that I am here to help you separate the political rumors from the actual deposits hitting your wallet. As we move toward the end of the month, the pressure on the Treasury is immense. They are managing the rollout of the One Big Beautiful Bill tax changes alongside these regular benefit cycles. This is why you might see your Where's My Refund status or your SSA portal showing pending longer than usual. The digital infrastructure is being stretched to its limit. If you are one of the few still receiving a paper check, your wait tomorrow might be even longer due to the new USPS delivery standards that went into effect earlier this year. This is just one more reason why I keep urging everyone to move to direct deposit. In 2026, speed is everything, and the mailbox is no longer a reliable way to receive your primary income. I'm keeping a very close eye on the Social Security Expansion Act and the tax elimination bills as they move through committees. The moment there is a real vote that puts extra cash into your hands, I will be the first to tell you. But for tomorrow, January 28th, expect your regular payment with the 2.8% COLA minus your Medicare Part B premium. It might not be the $2,400 stimulus the rumors promised, but it is your hard-earned money, and knowing exactly why it is the amount it is will help you sleep better at night. Don't let the headlines lure you into a big mistake with your spending. Stick to your budget and keep a close eye on that Friday SSI deposit if you're eligible. We are navigating this new economy together, one check at a time. One of the most vital shifts to track as we head into the final days of January is the double payment phenomenon for those on supplemental security income. If you are an SSI recipient, you likely noticed that you didn't receive a check on January 1st because New Year's Day is a federal holiday, which moved that payment to December 31st. But now, another calendar quirk is appearing. February 1st, 2026 falls on a Sunday, meaning the Social Security Administration is required to issue your February funds on the last business day of January, which is Friday the 30th. This is where the confusion starts. Because you're receiving your regular retirement or disability check on Wednesday the 28th and then your February SSI on Friday the 30th, it can feel like a massive $2,400 windfall is suddenly available. It's a dangerous trap for your budget because while your bank account looks high today, you won't see another SSI deposit for a full 5 weeks until March. We also have to look at the maximum benefit levels for 2026 because that is where the 2,400 headlines are truly coming from. For an average retired worker who reached full retirement age recently, the new monthly benefit after the 2.8% COLA is often landing right around that $2,400 mark. If you're a high earner who delayed retirement until age 70, your check tomorrow could actually be as high as $5,181. The $2,400 figure has become a viral catch-all number, but your specific amount is unique to your work history. If your check arrives tomorrow and it's significantly lower than you expected, don't immediately assume there was a mistake in the COLA calculation. Instead, look at the Medicare Part B deduction. In 2026, the standard premium jumped to $202.90, the first time in history it has broken the $200 barrier. This $17.90 monthly increase is essentially clawing back a huge portion of the raise the government just gave you. If you're wondering why some people are getting extra money that you aren't, it might be due to the new Social Security Emergency Inflation Relief Act that's currently moving through Congress. This bill, which aims to provide a $200 monthly boost to help seniors with rising grocery costs, has created a lot of premature excitement. Many people are seeing headlines about this $200 boost and assuming it's already been added to their January checks. While the bill is gaining massive support in early 2026, it is still in the legislative phase. If it passes, it would be a temporary 6-month relief program, providing a total of $1,200 for individuals or $2,400 for married couples. It's important to stay grounded. That money is a possibility for the future, not a reality for tomorrow's January 28th deposit. Another big mistake I'm seeing is people ignoring the new 2026 earnings limits. If you're under the full retirement age and you're still working a part-time job, you need to know that the limit has been raised to $24,480 for the year. If you go even a dollar over that, the SSA will start withholding $1 for every $2 you earn. Many seniors forget to report their new 2026 wages and then act surprised when their checks suddenly stop or shrink later in the year. The SSA has become incredibly efficient at matching IRS data in real time. If you had a great year in 2025 and earned more than you expected, that recalculation might be reflected in the check you receive tomorrow. It's not a mistake. It's an automatic adjustment based on your reported income. For those of you who receive both Social Security and a pension from a job where you didn't pay Social Security taxes, like teachers or police officers, don't forget about the windfall elimination provision. WEP, and the Government Pension Offset, GPO. There is a huge push in 2026 to finally repeal these rules, which can strip away up to $500 a month from a senior's check. If the Social Security Fairness Act passes this session, your $2,400 check could realistically jump by several $100s overnight. This is why staying active and informed is so critical right now. The rules are shifting fast, and the difference between a standard check and a maximized check often comes down to knowing which credits and deductions you're eligible for under the new 2026 tax laws. One of the most vital shifts to track as we head into the final days of January 2026 is the double payment phenomenon for those on Supplemental Security Income, SSI. If you are an SSI recipient, you likely noticed that you didn't receive a check on January 1st because New Year's Day is a federal holiday, which moved that payment to December 31st, 2025. But now, another calendar quirk is appearing. February 1st, 2026 falls on a Sunday, meaning the Social Security Administration is required to issue your February funds on the last business day of January, which is Friday, the 30th. This is where the confusion starts. Because you're receiving your regular retirement or disability check on Wednesday the 28th and then your February SSI on Friday the 30th, it can feel like a massive windfall. It's a dangerous trap for your budget because, while your bank account looks high today, you won't see another SSI deposit for a full 5 weeks until March. We also have to look at the maximum benefit levels for 2026. Because that is where the $2,400 headlines are truly coming from. For an average retired worker who reached full retirement age recently, the new monthly benefit after the 2.8% COLA is often landing right around that $2,000 to $2,400 mark. If you're a high earner who delayed retirement until age 70, your check tomorrow could actually be as high as $5,181. The $2,400 figure has become a viral catch-all number, but your specific amount is unique to your work history. If your check arrives tomorrow and it's lower than expected, look at the Medicare Part B deduction. In 2026, the standard premium jumped to $202.90, the first time it has broken the $200 barrier. This $1,790 monthly increase is essentially clawing back a portion of the $56 average raise the government just gave you. If you're wondering why some people are getting extra money that you aren't, it might be due to the new Social Security Expansion Act currently moving through Congress. This bill, which aims to provide a $200 monthly boost, has created a lot of premature excitement. Many people are assuming it's already been added to their January checks. While the bill is gaining massive support in early 2026, it is still in the legislative phase. If it passes, it would be a temporary relief program, potentially providing $2,400 for married couples over the year. It's important to stay grounded. That money is a possibility for the future, not a reality for tomorrow's January 28th deposit. As we look toward tomorrow, January 28th, the message is clear. The money is on the way. The 2.8% raise is locked in, and the calendar is set. But the $2,400 you're hearing about is a mix of high earner maximums, potential future legislation, and the double payment timing of SSI. It is not a magical bonus check that requires no action on your part. You have to be the manager of your own retirement. You have to understand the deductions for Medicare, the limits on your earnings, and the importance of that Friday SSI deposit for your February budget. In this 2026 economy, knowledge is the only thing that moves faster than the IRS. And staying tuned to these updates is how you ensure you never miss a dollar of what you've earned over a lifetime of hard work. Keep your eyes on your bank app tomorrow, but keep your mind on the facts we've covered today.